joining us on Epigral Limited's Q4 and FY24 results conference call. We would like to thank the management for giving us this opportunity to host them. On this call, we are joined with Epigral's management, represented by Mr. Maulik Patel, Chairman and Managing Director, Mr. Kaushal Soparkar, Executive Director, Mr. Sanjay Jain, Chief Financial Officer, and Mr. Milind Kotecha, Investor Relations. I would like to invite Mr. Maulik Patel to initiate the proceedings with his opening remarks, post which we will have a Q&A session. Thank you, and over to you, sir.
Thank you, Meet. Good afternoon, everyone, and welcome to the call to discuss Epigral's Q4 FY24 performance. I believe you had an opportunity to view the earning presentation that was released earlier today. We have witnessed a recovery in the chemical segment, though it was slightly slow. We do see a positive outlook on a sequential basis as well as coming quarters. The recovery majorly is on the demand side, but the realizations have still been subdued. We believe that the demand scenario has improved and is expected to further improve from here onward with improvement in realizations. Long-term outlook for the chemical and manufacturing industry looks positive. In this challenging environment, Epigral performed better on the sequential basis in every quarter starting from Q2 FY24. On a yearly basis, Epigral delivered a volume growth of 15% in FY24, majority of this growth coming from derivatives and the specialty business. In Q4 FY24, Epigral's sales volume grew by 9% year-on-year, and this volume growth is majorly coming from the new projects commissioned in FY23. This resulted in revenue growth of around 11% and the PAT growth of 56%. As the business improved, our EBITDA margin also improved from 21% in Q1 FY24 to 30% in Q4 FY24, leading to the 25% margin for full year FY24. In line with our focus on diversifying our business model in Q4 FY24, revenue contribution from derivatives and specialty business crossed 50% mark and reached to 52%. For the year as a whole, revenue contribution from derivatives and the specialty business reached to 45% versus 30% in FY23. This strategy of diversification of entering into the various import substitute products and the catering to various industries played a key role in Epigral being resilient in this tough FY24 year. Our project commission in FY23 contributed partially in FY24 and led us to a volume growth of 15% in FY24. The projects commissioned in FY23 and projects that we will commission in FY24 like CPVC raising capacity of additional 45,000 ton per annum, chlorotoluene value chain facility and CPVC compound facility will drive volume growth for the coming years. The expansion projects related to chlorotoluene value chain and the CPVC compound are almost ready. We are in the final stage and we expect to be completed in the first half of FY2025. In FY24, Board of Directors has also proposed a final dividend of 50% on face value of rupee 10 and rupee 5 per equity share. We are focused on expanding derivatives and the specialty business and diversifying the business model and strengthening our integrated complex. We believe this strategy will bring us consistent growth in coming years and will lead us to create value for our stakeholders. I now hand over to the call to Mr. Sanjay Jain, our CFO, who will take us through the financials.
Thank you, Maulik. Let me take through the financials for the quarter. The company has achieved capacity utilization of 83% in Q4 FY24. Again, 81% in Q3 FY24. Sales volume grew by 9% on year-on-year basis and 4% on quarter-on-quarter basis. Revenue increased by 11% to rupees 525 crore in Q4 FY24 as compared to rupees 472 crore in Q3 FY24. This is backed by volume growth in chlor-alkali, CPVC resin and improvement in the realization for chlor-alkali. On year-on-year, the revenue decreased by 7% mainly on account of drop in realization across all the products. In Q4 FY24, revenue contribution from derivative and specialty business increased to 52% as compared to 44% in Q3 FY24, The same was 38% in quarter 4 of last year. EBITDA grew by 27% to rupees 155 crore from rupees 123 crore in quarter 3 FY24. This majorly on account of increase in the volume that led to efficiency and improvement in spread. EBITDA margin stood at 30% in quarter 4 FY24 against 26% in quarter 3 FY24 and against 28% in quarter 4 of last financial year. PAT grew by 55% to rupees 77 crore in quarter 4 FY24 from rupees 49 crore in quarter 3 FY24. PAT margin stood at 15% versus 10% in quarter 3 FY24. Now let me discuss about financials for financial year FY24. Capacity utilization remained almost at the same level of 78%. FY24, the revenue decreased by 12% to rupees 1,929 crore from rupees 2,188 crore in FY23. This is on account of decrease in realization across all the divisions. Otherwise, volume grew by 15% in FY24, majorly from derivative and specialty business. Realization dropped significantly in the range of 12 to 45% FY24 compared to FY23. We believe it is a bottom level and likely to improve from here onward. In FY24, revenue contribution from derivative and specialty business increased to 45% as compared to 30% in FY23. This is in line with our focus on increasing revenue from derivative and specialty chemicals. EBITDA decreased to rupees 482 crore from rupees 689 crore in last year. Even in this tough year, we are able to maintain EBITDA margin of 25%. PAT stood at rupees 196 crore with a margin of 10%. Our return on capital employed for FY24 stood at 17%. This is after considering the capital work in progress as an capital employed. Excluding the capital work in progress, the ROC stands at 21%. And if we annualize EBIT of quarter 4 FY24, then ROC would be at 24%. Our net debt stood at rupees 960 crore as of 31st March 24 against rupees 863 crore as of 31st March 2023. The increase of rupees 98 crore in net debt is majorly due to capex. The company has spent rupees 405 crore on capital expenditure, funded partially from the borrowed fund and partially from the internal accruals.
We can open the floor for the Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Priyank Chheda from Valium Capital. Please go ahead.
Hi. Congratulations, team, on the strong performance. And our overall strategy on import substitution is clearly started showing positive results. My first question is on caustic soda industry dynamics. If you see from FY22 to Q2 FY24, which is September 24, India was a net exporter, while starting from last quarter, we have become net importer. And for the whole year, our imports have doubled at 2 lakh tons. So what is the reason while we have started seeing a huge imports coming up and exports have actually dried up? So when can we see this dynamics getting changed to India becoming a net exporter?
Yeah. So if you see our alumina capacity in last entire financial year has increased in India, and that is additional demand of caustic on the eastern part of India. So if you see the eastern part of India, the caustic demand has picked up, and that keep continuing even in this year as well. So that is the major reason our import volume has gone up. Definitely the export has reduced. The major reason is because of the global scenario, which is not great. definitely our domestic market is doing great, but the export market, even still in Europe and in US, is still reviving. It is still not back to the original level, even pre-COVID level as well. So that is the reason the export is not encouraging right now. But we are better than the Q3 level right now in terms of the realization, and probably here onwards will improve, going on just on quarter basis.
Okay. And sir, how much of the savings we have seen in the quarter or a year in terms of cost reduction because of the coal prices coming down? In any qualitative way, if you can help us, what has been the cost savings in the caustic soda segment?
Definitely the coal price is going down, but it is not a significant. The basic coal price is going down, but at the same time the supply chain and the logistic cost has gone up, and the currency movement has started moving up. So it is not a major saving has started coming, but people who have a focus on the solar and wind in the past, who has invested, that benefit has started coming reflection in the balance sheet in this year. So there is a change in the slight advantage in terms of the solar and wind hybrid project has commissioned in most of the companies. Like in Epigral also, we have commissioned 18.34 megawatt, and we have realized, I think, 6 to 7 months a gain in terms of advantage in terms of power cost.
But still, would it be 10% of kind of a savings within caustic soda raw material cost as an overall basket would be seen because of the coal prices going down? Can we roughly estimate that?
Yeah, you can say that, but it's not substantial. Yeah.
Got it. No problem. Coming to the derivatives part on the epichlorohydrin, what has been the utilization for in Q4? We were at 55% roughly in Q3. And while we understand all the other derivatives continue to run at 100%, so this is the only segment which has contributed positively in terms of revenue growth for derivatives.
Yeah, so we have reached to almost 60% running in Q4. Epichlorohydrin, and definitely still Europe also we have opened up, and we have started doing the export to the European territories also, and we have done our bulk shipment as a second vessel we have done in this year, this month. And US, we are still in touch. Still the market is not open up for us, but I think we are looking for a big contract in the second half of this year and the coming years for the European market, for the US market. So still that we are working on that part in the Europe, and I think the volume will increase going forward from here onwards on quarter basis as our export market is picking up.
Okay, so what we understood earlier was that epichloro as a segment sees around 80,000-85,000 tons worth of imports happening into this country. Now, while we have started doing exports, so would exports be very high in terms of realization value? And how does this imports versus exports, fare out in terms of the industry dynamics?
The ECH market is going up. All the domestic capacity is picking up. They are expanding their capacity, and they are increasing their volume on month-on-month basis. Another two big expansion is going to complete probably by end of this year or beginning of next year. So definitely our epoxy capacity, which has compared to before 2 years, we are going to be almost double the size of what we have the capacity 2 years back in India. So definitely our capacity, our ECH demand will go up in India within country itself going forward. And the market which is catering by epoxy resin is majorly by renewable energies, which is a windmill, which is high in demand right now. Second is in the adhesive sector, and third is in automotive sector. So all three segments is growing in double digit in India. So we are expecting very high growth in next coming 5 years or coming decade for this particular product. And we have seen the similar growth in China since 2011 to 2020. Same kind of growth has happened in China also, but we don't expect that much volume as China, but at least compare what we are here, in today's situation, at least the demand will pick up almost double from here in next 5 years.
And are the realizations too different for exports versus domestic, or are they import parity?
See, export has definitely it has a realization is better, and we have but there is an infrastructure also we need to create in Europe as well. We have done a local storage tank, and we have focused, and even in the US also we have kept a storage tank. So there is a cost also, additional cost also, and there is an additional transportation cost also. But in the same time, we have additional, there is a advantage in terms of the realization also.
Got it. Coming to CPVC compounds, the forward integration that we are doing from resins to compound, does this add any value to the spreads or P&L of Epigral, or we are indifferent selling resins or compound based on whatever the customer demand would be?
So CPVC compound, again, the margins will be in the range of what we have for the around 25% put together. So it's not like we are doing just for the sake of it. It's actually it will be around 25% margin what we have for the company put together.
So compared to resins, the compounds would have a higher margin. Is what the message that I should take on?
No.
It's not like that.
Not like that. So resin, if you consider starting from the resin and to till compound, the margin will be the almost similar range. We don't consider compound as a separate and independent project because as our capacity is increasing from 45,000 tons per annum, which is 1.5 times the capacity which we had. So some of the customers which we are not catering right now, we would like to cater, and they are buying only compound. So for them, we are creating this infrastructure, and we see CPVC compound as a part of CPVC resin only. Definitely it is a value addition, but in terms of overall margin, starting from the resin to compound, not resin, PVC resin to compound, we are considering whatever we are expecting in terms of the company's overall margin is 25%. We will continue with that, yeah.
Got it. Just a last question from my side on CPVC, the incremental capacity and chlorotoluene capacity that would come up, say, in next 3-4 months. What kind of utilizations should we think of in FY25 as we scale up?
So additional capacity of CPVC resin that we have commissioned in 45,000 tons. That will take around 4 to 5 months to kind of reach optimum. So maybe in the Q4. It will reach around optimum, and also for the chlorotoluenes, we expect that to reach optimum maybe end of Q4 FY25.
So in the chlorotoluene, we have 3 different blocks. All blocks will in next 3 to 4 months time we are going to commission one by one all different blocks, and all entire chlorotoluene project will be ready for commissioning. Everything total all put together will be commissioned by end of Q2. And I think we are expecting to realize, products started moving from the Q4 onwards.
And our optimal utilization is somewhere around 65-70% mark, right?
Yes. We are expecting to reach around 60% by end of Q4.
Got it. Thank you. I'll come back in the queue. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your questions to 2 per participant. If you have any follow-up questions, you can rejoin the queue. The next question is from the line of Rohit Sinha from Sunidhi Securities. Please go ahead.
Yeah, thank you for taking my question, sir. Congratulations for a very good set of numbers. So some of my questions are already asked. So few others are like, so if we see the margins in this quarter, there's so one of the best margin we have in the 4-5 quarters, and still I think ECH and CPVC get to see price improvement as well as utilization levels should go up going forward. So, as we are talking about around 25% kind of EBITDA margin going forward, I'm just expecting that given this kind of margin and the scope of improvement is still lying there, so we should be still, I think, we managed to report better than 25% margin for 25 also. So just from that, how we are seeing an improvement to sustain for the coming quarters?
Yeah. So in terms of the margins, as we recently commissioned the CPVC capacity as well, so it will take time to revamp. So revamp as in it will take to reach to optimum level. So that's where we expect that year put together, we will be somewhere around in the range of 25% kind of a margin. And if everything in terms of all the products stand in a strong position in this FY25, then the margins can go on upward direction as well. But we believe that 25% in the range would be something which is definitely sustainable.
Okay. And in this fluorotoluene plant, I guess we are slightly 1 quarter behind in terms of commissioning. So are we still in line with our overall targeted revenue for FY24, and are the offtakes aligned for that?
So, Rohit, we are going to commission, because we have 3 different blocks in the chlorotoluene project. So, one by one, we are going to start doing it from this quarter onwards. So, complete chlorotoluene project will be completely commissioned by Q2, as we mentioned in our presentation. And, the product will be all 3 different phases, all 3 different category products will be out in the market from this end of this quarter onwards in a phase wise. So definitely we are expecting the start generating the revenue from the 3rd quarter onwards slowly and gradually, but eventually as optimum capacity we will reach in Q4, end of Q4. Yeah.
Okay. And one lastly, as on the pricing side, as we are seeing that there has been some improvement in the caustic prices, but still the ECH and CPVC and other products are still lagging behind. So just wanted to know your take on how industry is shaping right now, how demands are, as you have already indicated that demands are slightly improving, and how this should actually translate into improvement in the prices going forward, or whether from when we should be...
Not clear. We are not able to understand the question.
So hello, am I audible now?
Yes.
Yeah. So just on the pricing side, as in caustic we have seen some bit of improvement, but other products are lagging right now. So how you are seeing the overall industry, or what is your take on how we'll be seeing the price improvement in the other products, and even in the caustic side also? I guess this is a first leg of movement. Still a lot of compared to 5-year average also, still we are slightly on the lower side. So how we should be seeing the coming quarters for the price improvement in the products?
So in terms of caustic soda, if you ask, every company has a different calculation in terms of the energy cost, which is major driving factor right now. So that there is a change, as slightly change in the coal price. Definitely that will advantage to the caustic soda, and the local demand has picked up in India, and that is also giving an additional in terms of the support to the caustic soda business. And we are expecting in this year also, I think we are not expecting big jump in terms of the business of the chloro-alkali business, but slightly variation from here will go on based on the quarterly basis, in terms of the domestic demand has picked up further, because still the export market has not picked up as is required, as in the COVID level or the pre-COVID level. So that is, I think, will take another 3 months to 6 months time, and that's how the overall caustic demand will pick up in the industry, in the domestic industries as well, going forward.
Okay. That is from my side. Thank you and best of luck.
Thank you. Before we take the next question, just a reminder to participants, please use your handsets while asking a question and refrain from using the speaker mode. Thank you. The next question is from the line of Noel Vaz from Union Asset Management. Please go ahead.
Yes, thank you for the opportunity. I have just one question. So over the past few years, I think as per the presentation is mentioned that there's been 400 crores of capex for 2 years, and for FY25 the plan is for 300 crores, right?
Yes, that's right.
Yes. So I just wanted to get a sense of number one, these capacities which have been now built up for the past 2-3 years, including FY25. How long will it take for them to fully reach utilization? If you can give some details on that, would be good. And what kind of asset turns can we expect from them?
So the capacities that we commissioned, recently we commissioned CPVC resin capacity of additional 45,000 tons. And now in quarter 1 and quarter 2, we will commission the chlorotoluenes and the CPVC compound capacity. So FY26 will be a year where all the products will be at optimum. And again, the asset turnover would be in the range of 1.2, 1.3 kind of, even after once we commission these plants.
Okay. Yes. So just to understand, I think whatever is being done so far, that will all be ramping up into FY25 and 26, right? I think then we'll hit full utilization on the capacities, right? I think that would be a good way of looking at it.
Yeah. So the capacities that we commission in this year will contribute partially, whereas FY26 we believe whatever we have commissioned in FY25 will reach optimum in the Q4 itself. So FY26 we will enjoy the full, you can say, optimum level capacity utilization for all the products that we have.
Okay. So, but if we were to follow this logical conclusion, then we would need to start another growth plan in FY26 itself, right? So, in what direction would we be looking at potentially?
Yeah. So our focus is more towards investment is going towards more on derivatives and the specialty side. So we are looking for more investment on the downstream chemicals, what we are manufacturing right now, and some of the value-added products from what we are producing right now. So our focus is going to be what we have generated in this financial year. In quarter 4 we have reached to almost 50% revenue from the derivatives and specialty. That will keep continue our focus and investment, and eventually we would like to reach to a 70% derivatives and specialty and 30% from the chloro-alkali business in probably in next 2 years time or 3 years time.
Yes, thank you. I'll get back in the queue. Thank you.
Thank you.
Thank you. The next question is from the line of Shaurya Shah from Equirus Securities Private Limited. Please go ahead.
Yeah. So I just had one question. What is the current CPVC pricing, and where do we see it going forward, say in FY25 in kilogram terms?
The current CPVC prices is around, it will be somewhere in the range of around 1,30,000 kind of price. And again, we believe that it might stay at this level, or it might improve from here on, maybe in FY25. But again, it's so difficult to convey any number as of now.
Okay, yeah. That's it from my side. Thank you.
Thank you. The next question is from the line of Sudarshan from Prosperity Wealth Management. Please go ahead.
Yeah. Hi, sir. Will you be able to give us segmental margins, given that we are going to be closer 50% from derivative segment, and Q1 and Q2 will have further derivative commissioning?
So again, we actually don't share the product-wise or the segment-wise margin. So a company put together, whenever we select any product, the margins for any product will be in the range of 25%. And again, but when we commission the product initially, it's not in that range, it is at lower, because once the plant reach optimum, then you can enjoy that kind of margin. So initially it will be at low. But overall, if things run on optimum basis, then 25% is something EBITDA margin can be generated. And ROC will be in the range of 24-25. So our focus is towards the ROC. But it's difficult to give a number segment-wise.
Okay, sir. Okay, thank you for that. And coming to your chlorotoluene and its value chain, so can you give a rough estimate of what kind of products and the volume and value of the domestic business, and will those be import substitutes?
So it's an import substitute product. So the chlorotoluenes, that the product that we are entering are all import substitute products, and again will be the first in India. And the market for that is again growing in a double-digit percentage. And it's not like just one particular product to give you an exact volume-wise number. It's a multiple products. It's currently in the first phase. We are coming up with the product in the range of around 10 to 15 products. So that's what I can say. It's growing in the range of double-digit percentage, and it's all import substitute as of now. And we are the first in India to start these products.
Okay. So all the three phases would be a multi-purpose plant, right?
Yes. So as Maulik sir earlier said, it's into three blocks. So one of the block is a multi-purpose plant.
Okay. So other two would be dedicated for a single product.
So basically, see, we as a company always believe in being an integrated plant. So we will start from the basics, like from the chlorine and toluene, and then all the way going up to the multi-purpose plant. So it's that way, it is separated in three blocks.
Okay.
So it's an integrated plant. It's not just like N1 -1 kind of thing.
Oh. So what is the capex incurred till now for this particular chlorotoluene capacity?
Yes, so capex, I mean, what will be somewhere in the range of 220, 250 kind of thing.
Okay, sir. And so this incremental margins, this 4% during this quarter, is it from caustic segment or?
Incremental 4% margin is a combination of many things. It's not just only caustic, because as we have bit improved on the CPVC side, also capacity utilization, caustic has also gone up. So it's a combination of all products which has led to the improvement in the margins. Okay. It's not just one particular product.
Okay. And can you give us electricity cost as a percentage of your caustic?
It is, for caustic, the power cost is around 50-55% in total.
55% would be the electricity cost?
Yeah, electricity.
Okay. Thank you. That's it from my end.
Thank you. The next question is from the line of Deepesh Sancheti from Manya Finance. Please go ahead.
Hi, am I audible?
Yes.
Okay. Just wanted to know what is going ahead, what is the revenue mix the company would like to have in terms of derivatives and specialties to chloroalkalis? Will it be 50-50 or will it be, will you want to go for 70-30?
So
going in FY25, I want to know for FY25 and FY27.
So definitely our focus on the last 4 years, we are keep investing only into the, not last couple of years, we have started focusing on the derivatives and specialty. We are keep investing there. And going forward also, our capex will be in the derivatives and specialty only. So as our target is reached to 50%, which was there, now we have achieved in Q4, and going forward, I think we are going to achieve probably now next target we have kept it is 70-30. So 70% will be derivatives and specialty, and 30% will be in the chloroalkali business. Going forward, that's the target we wanted to achieve going forward as we are investing continuously on the derivatives and specialty segment.
So I can assume that by FY27, when all your expansions will come to commissioning, that time we will be able to achieve 70-30, or will it be before?
No, that time I think we are able to achieve 70.
Yeah. That will be able to.
So FY25, how much should an investor expect?
So FY24, we have made the derivatives contributed 45% of revenue. So maybe FY25 it can be in the range of 55 on lower side and upper side it can be 60.
Great. Okay. And the second question is, wanted to know your debt quarter-on-quarter wise and year-on-year wise, because the interest cost in this quarter is significantly low. So wanted to know what is the reason, main reason for this.
Okay. With regard to our debt numbers, the total debt of the company is 960 crore as of 31st March 24, which was 863 crore in 31st March 23. And the interest cost, which is low in quarter 4 compared to quarter 4 last year, this is on basis mainly on account of the positive impact of mark-to-market provision, and second is on account of the repayment of the debt.
Sorry, I didn't get the second part.
Second is on account of the repayment of the debt.
Repayment of the debt. So, what was the net debt quarter-on-quarter wise and year-on-year wise? Because the net debt you mentioned in the right now was 960 crores, 60 crores. So, quarter-on-quarter, how much was it?
So, if you compare with the year-on-year basis, the incremental of the net debt to 98 crores mainly on account of the CAPEX loan that we have taken for the expansion project. Otherwise, the repayment is there around 240 crore, and that is for the whole year. So that is the main reason our interest cost has drastically gone down in quarter 4. And working capital also, since we have increased our operations drastically, so our working capital requirement also has gone up compared to last year and this year in the range of around 70 to 100 crore rupees.
Working capital has gone down.
It has gone up in terms of absolute.
Okay.
Yeah, because in terms of the products that we have entered and the size of the revenue has gone up.
Okay. And what is the cost of debt?
Cost of debt as of this moment of time is around the 8.25, 8.40 sort of thing.
Okay. And what is the expansion mantra? Is it mainly import substitution or forward and backward integration?
So it's a combination of both the things. Whenever we decide to enter into products, the first thing is we want to be into products which are first time in India where the market is growing. And second thing, where we can make our integrated complex much more stronger. So basically what we are producing, we can use as a raw material for the product. So these are the criteria when we select for any product to enter.
Okay. Just one last question, that what is the, how much revenue did we get from Make Money Organics? Because it's our, it's our parent company. So how much was the revenue which we got from Make Money Organics?
So just to let you know, we were subsidiary of Make Money Organics. That was before May 2021. We got demerged from that company. Now it's a totally two independent company. And when we say Epigral and the numbers that you're seeing, it's of independent entity and there is no cross-holding. So it's a totally independent company in that manner, and the revenue that is there, it's solely of the Epigral Limited.
How much did we supply to Make Money Organics? That is all I want to know.
That way. Okay. So again, the caustic soda and the chlorine is something which goes into almost all the industries. So to that extent, it has gone. I don't have that number readily in my hand, but it would be in the range of 10 to 11%.
10 to 11% of the caustic soda and of the chloralkali, not of the total revenues.
When I say 10 to 11%, that will be of the total revenue.
Total revenues. Okay. And what about our realizations? Our realizations on all the products have gone down year on year and quarter on quarter. Then what has given the main boost to our margins in this quarter? Was it the interest cost or was it something else?
So again, at the margins level, the raw material prices have also bit cooled off, which were not as cooled off in Q1 and Q2. So it has bit cooled off compared to the first half of FY24 in H2 of FY24. And that's where you can see a bit better better margins in the Q4 FY24.
Any particular raw material which has cooled off to a great extent?
No, it's a combination of it for the various raw materials, not specific to any specific product.
Okay, main raw material, if you can just, how much percentage-wise it has gone down quarter on quarter, if you can just...
See, again, for every product, like for chloral, caustic soda, then coal and salt is the raw material, for epichloronic, glycerin, and for CPVC, it's PVC. So again, it's difficult to put. But see, being a further integrated and as we increase our capacity utilization for the new products that we have commissioned, because when we commissioned the products in FY23, in FY24 initially, products were not running at optimum. So now it has been inched up. So once we reach kind of optimum for the products that we have commissioned, the EBITDA is going to go up. That is one thing. Second thing, in terms of also the raw material prices, it helps a bit. And also in few cases like caustic soda and in case of hydrogen peroxide, the realizations has bit inched up marginally in Q4.
Okay, thank you so much, and very, very happy with your results. Thank you again. And just one suggestion, like generally you give a guidance in the investor presentation, and in the next 3 years we look at this much crores of revenues. This time it was missing. I mean, before in a couple of quarters, if you can mention it in the Concall, it will be great. Otherwise, in the next presentation, we'll be looking forward to that.
So see, considering the capex that we have done and the projects that are expected to get commissioned, we can give a kind of a guidance in terms of the volume, which would be in the growth of around 15% in terms of volume growth in FY25. It should be around that.
Okay, 15% volume growth.
Yeah.
Great. Thank you so much.
Thank you. The next question is from the line of Tarang from Old Bridge. Please go ahead.
Hi, good evening. Congrats for a strong set of numbers. Just a couple of questions. One, on CapEx, right? Given that the CPVC plant has already been commissioned and you all are commissioning the chlorotoluene plant in Q1, where are you planning to deploy the 300 crores?
So 300 CR. See, basically we are going to do a continuous capex. So the new projects that we will be entering into, we might be announcing in a couple of months that we will be entering into. So the capex would be towards that.
Okay. And what's the maintenance capex for the entire infrastructure?
Maintenance capex is around about 1 to 1.5% of the total asset block.
So, I mean, how much is the gross block as on 31st March 24?
It's about 2,400 crores.
So roughly about 40 crores. Would that be the right way to look at it?
Yeah, that's right. Yeah.
Okay, and you did guide for a 15% volume growth, right, for FY25?
Yes, yeah, that's what we are targeting for.
Okay, thank you.
Thank you.
Thank you. The next question is from the line of Nitesh Dhoot from Dolat Capital. Please go ahead.
Yeah, hi team. Thank you for the opportunity. So my first question is on the chlorotoluene capex. So you mentioned the outlay of 250 crores. What is the likely asset turn there at the current, at the current prices, and what would be the margin expectation there?
Yeah, so the capex that we will be doing, and out of that we are expecting the top line in the range of around 350 CR. So once we reach kind of optimum level, so the expected top line from that will be around 350 CR. So then the asset turnover will be somewhere in the range of 1.3, 1.4 kind of thing.
And the margin expectation there at a gross margin level maybe?
See, again, as I said, we don't share product to product wise margin, but again, that will be in the range of overall company's margin of 25%. But again, initially, yeah.
Okay. All right. And secondly, on the total investment in CPVC till date for the 75,000 tons capacity, can you share that?
CPVC till. Okay.
Sorry, investment for CPVC.
Total investment on CPVC till date, that's for 75,000 tons.
So 75,000 tons all put together would be somewhere in the range of around 430 CR.
All right. And lastly, on epichlorohydrin also, I mean, what was the total investment there?
So epichlorohydrin, the capex was around 275 CR.
All right. This is helpful. Thank you so much.
Thank you. The next question is from the line of Rohit Nagraj from Centrum Broking. Please go ahead.
Thanks for the opportunity and congrats on good set of numbers. My first question is on the chlorine consumption. So based on the projects that we are having, what is the current level of chlorine consumption captively, and what has been the realizations on the same during the last quarter and generally during the entire FY24? Thank you.
Chlorine consumption is, as of now, is in the range of 65% of our total production. And with regard to the realization of chlorine, it is somewhere in the positive in quarter 4, but for the year as a whole in the range of 1,000 to 1,500 sort of thing. Negative, half to negative.
Right. Thanks. And just a allied question, after all the projects are completed, what would be the captive consumption of chlorine then?
See, once all the projects will be reached at optimum level, the CPVC and the chlorotoluene and the ECH, then our chlorine consumption will be, I think, almost reached to around 80 to 85% captive. Captive plus pipeline customers, so 85%. So 15% it is still available for the market.
Sure. That's helpful. And second question is on the ECU. So if you can just give us an idea about how the ECU has fared in current quarter, the previous quarter, and for the full year.
So ECU for the Q4 is around 29,000.
Yeah, and Q3 and during FY24 for the full year?
So FY24 put together is around 28,500 kind of an ECU. Full year.
Right. Fair enough. That's all from my side and best of luck. Thank you.
Thank you.
Thank you. The next question is from the line of Pinaki Banerjee from Om Capital Private Limited. Please go ahead.
Good evening, sir, and thanks for the opportunity. So my first question is that in FY24 year-on-year there's been a 12% fall in revenues, but in balance sheet we are finding that the trade receivables has gone by about 7.5%. So, sir, can you please explain what is the reason for this?
Okay. So revenue, the revenue which is down in year-on-year basis in the range of 7 to 8%, but the receivables is on the upper side because the product which we are dealing as of now, particularly CPVC and chlorotoluene, there the credit period is somewhat higher side compared to the chlor-alkali business.
Okay. Sir, and secondly, sir, actually there has been a decrease in your power and fuel expenses considering the fact that you are having the advantages of captive plants. So, sir, actually, can you quantify how much are you able to use it for captive consumption and how much you have to source it from outside?
So currently the captive power plant that we have, that whatever it is coming, we are consuming in-house. And also we have last year we entered into the wind solar hybrid power plant. So we are using that also as a power in terms of our total requirement. Okay. So 100% is being made through your captive plant, right? Yeah, 100% through captive plant. Sir, and sir, can you give us the volume breakup of your chlor-alkali and the derivative segment? Is it possible? Sorry. Sir, can you give us the volume breakup of your chlor-alkali and your derivatives business? It will be difficult to give the product-wise breakup. Okay. So, sir, ideally going forward, what will be the ratio 50-50 and slowly it will be increasing to 60-40 like this? Yeah, eventually it will increase to 70-30. Okay. So, in how much time period? 2 years? In next 2.5 years, yeah. Okay, sir. And last question, sir, the current Middle East tension, is it going to have any spillover effect on the business?
So India is a net importer of all the chemicals. So definitely anything tension outside the India will definitely support the domestic manufacturing.
Okay. Fine. Got it. That's all from my end, sir. Thank you and all the best.
Thank you. The next question is from the line of Balkrishna Bagasia from Axanoun Investment Management. Please go ahead.
Good evening, sir. Thank you for the opportunity. So my question is related to ECH. So recently DCM Shriram and Grasim and they have come up with the backward integration and manufacturing ECH. So regarding on a global level from the India perspective, like out of total capacity of epoxy resins, how much capacity would have the backward integration of ECH in terms of percentage?
So as of now in India, we are the only one in terms of manufacturing epichlorohydrin, and the rest of the ECH is demand is met through imports only.
Okay, I mean after 1 year or something, can you do you have any rough figure or something like that? Once these plants come on stream.
Yeah, I think one of the epoxy manufacturers is Grasim, and they have almost doubled their epoxy capacity recently, and they've also announced the ECH plant as a backward integration, and their plant will be commissioned probably by next year. That's what they've announced. So I don't know what is the status of the project right now, but yeah. But still, after commissioning of that plant, they are going to be net buyer of epichlorohydrin, looking at their capacity expansion in this financial year.
Okay. And another question is, now Adani Enterprise has awarded EPC contract for, building the kind of 2,200 ton per day of the kind of chloralkali plant. So is it going to have a positive impact considering the India is importing the PVC to a big extent, or it will have a negative impact on our company?
No, definitely it is a positive impact because the PVC we are net importer, and it will be support to the domestic PVC consumption, and I think it is going to be help to the PVC industry who are the consuming PVC as a raw material. And in terms of caustic, there will be pressure a little bit, but we believe that going forward, our alumina capacity in India is growing, and the way the industry is picking up, so the growth will pick up and the demand will match probably in couple of. So the pressure will be there on the caustic side, but not for a long term, for a short term. And I think this capacity which is announced by Adani, I think that is also going to come in a phased manner.
Right. They are planning for commissioning in 15 months. Okay. And last question is electricity, it is a big part of our cost. So I think earlier a participant asked in this regard, but I did not get the clarity. So out of the total electricity that we consume, what percentage we percentage we produce in-house plus with the JV, and what percentage we are buying from the grid?
So it is 8 to 10% we are buying from the grid, and that is also cost is offset by the solar and wind, which we have done the hybrid project.
Okay, that's it from my side. Thank you.
Thank you. The next question is from the line of Parth Mehta from Valium Capital. Please go ahead.
Yeah, hi. First of all, congratulations on the good set of numbers. I just have two bookkeeping questions, if you can help me, with the utilizations of caustic or chloralkali plant.
Presently, for the quarter is about 85%.
Okay. And full year that would be?
Full year it's around the range of 77% sort of thing.
Okay. Okay. And if you could just help me with the current market prices for chloromethane, hydrogen peroxide, and epichlorohydrin.
The chloromethane prices would be somewhere in the range of around 28,000 to 30,000, and hydrogen peroxide would be in the range of 25,000 to 27,000.
25 to?
27,000.
27. And epichlorohydrin?
Again, it will be in the range of around 1 lakh.
Okay. Thank you. Thank you so much.
Thank you. The next question is from the line of Ketan R. Chera who's a retail investor. Please go ahead.
Hi. Thank you for the opportunity.
The line for the current participant has dropped from the queue. We'll move on to the next question. The next question is from the line of Sudarshan from Prosperity Wealth Management. Please go ahead.
Hi, sir. Can you comment on the company's current unutilized land bank post the commissioning of CPVC compound and chlorotoluene?
So, from the existing complex, we have still another 25 to 30% land is available for the future expansion in the existing complex, which we have purchased in 2007-8. And above, additionally, last year we have purchased the additional land of almost 75 acres, which is almost close to 400,000 square meter land. We have purchased 1 kilometer from the existing complex for all our future expansion for next 5 years.
Okay, so this 25 to 30%, can you give me an absolute number on it?
That actual number actually not in in our hand right now. Yeah.
Understood. Thank you very much. That's it from me.
Thank you. The next follow-up question is from the line of Priyank Chheda from Valium Capital. Please go ahead.
So just a question on, good to see the dividend payout. And since we are entering onto a very lean capex now going ahead and majority of the derivative capex is behind us, how should we look forward for the debt reduction plans? We are at 900 plus crores. What should be the debt reduction strategy going ahead?
Yeah, so what you said is right, considering the cash flows that will be generating in FY25-26. The part of the amount will be going in the capex that we'll do, and the surplus fund that will be left will be used to reduce the debt of the company.
Okay, and Milind, if you can help me on what would be the outstanding borrowing from the holding company that we had borrowed as on March 24 versus March 23?
Very cool.
The borrowing of the group company is almost within the tolerance limit only, but right now the figure is not there as of now.
So the debt, the preference share that was there was 150 CR as on last year, which has come down to 95 CR.
Okay, so currently it has come down to 95 crores.
Yes.
And would this be the priority to first repay that as a good corporate governance practice?
Yes, it will be the priority to reduce that first.
And not just that, the kind of debt that we have, it looks like that it has peaked out in this current year, maybe in the next 6 months. Thereafter, with the cash flows coming in, it will only be coming down. And we go back to that earlier debt EBITDA levels of whatever we had said, which is still under 2. We'll go back to even much lower than that as we go.
Got it. So whatever the total cash flows that we would be generating, majority after the 300 crores of capex, everything would be paid as a debt, repaid as a debt, and the holdco company borrowing would be the first priority to be repaid, right? That is what.
Right.
Yeah. And just on the last question on what's the capex amount which is pending for chlorotoluene?
Chlorotoluene, it would be, I don't have the exact number right now, but it would not be the big number.
Got it. So the 300 crores kind of a capex out minus whatever the maintenance capex of 30-40 crores we would have, the other block of 250 crores completely would be going towards a new project which we would announce in the coming 2 months, right?
Yeah, that's right. See, yeah, it will be around that range.
There will be always a balance of growth capex and debt reduction. That has to be balanced in order to ensure that we go to our projected levels of profitability also in the years to come and not to lose the opportunities. So it will not be just directed towards only debt reduction or only towards capex. We'll balance that properly.
Perfect. All right. Thanks a lot.
Thank you. Ladies and gentlemen, we would take that as our last question for today. I would now like to hand the conference over to the management for closing comments.
Good evening, everyone. I would like to convey that long-term story of India remains intact and current situation is short-term. Hence, looking at the Indian consumption story, we are positive about long-term outlook and we are working towards that. Though our future expansions and diversification in terms of multi-product capturing various industries, we are targeting consistent growth. I would like to thank you all for joining us here today. Please feel free to reach our IR if there are still any unanswered questions. Thank you everyone for your participation.